Hello and welcome to this week's FX update. Begin with the dollar index. We had the false breakout the week before. We had that big set of sell signals, and then we broke back down through the weekly zone at the end of last week. Extended lower really throughout the week. That little blue arrow on Wednesday is purely a timing point. It needs other things to connect with it. And we closed below the next weekly level at 96.06, which is now a resistance, so pretty poor. It's still in a huge piece of sideways. The level that we're really interested in is if it has another poor week, is down at 93.96. As usual, we've got the opposite pretty much in the euro. Very, very strong week. Had the power play breakout the week before, just here. Ignored the daily level on the upside and then held it on the downside and extended higher. So 116.17, long way away in terms of a resistance. 111.11 is a support that's held and so remains relevant. We'll just have a quick look at the futures, just see where we are there, see if there's any other levels. Pretty much the same signal, so 115.86 on the upside. Note that we hit 3 up on the futures just on Friday. Onto the pound. Also positive, not much in the way of reference points, anywhere near 132.84 as a minor level. Stocks down, dollar yen down is the way it works. We had a major sell signal the week before, had that slam dunk and bear cage play after the Ichimoku induced false breakout. As it turned out, the stock market overtook it. Another slam dunk at the end of last week, sort of stalled around the monthly level a little bit, but then we've taken it out and now we have the final support at 104.80. 107.31 is going to has to cap any bounce. Aussie dollar. We had the exhaustions point at the end of last week. Talked about taking the profit on the breakdown. Then had some positive signals on Monday. Extended back up. It's underperforming compared to other things, and 67.00 is a massive resistance. Kiwi. Kiwi pretty quiet. It's always been the poor relation of the two in terms of getting signals or anything that's actionable. We don't very often look at dollar Swiss, but because markets are a bit crazy elsewhere, let's just have a quick look. I'd never trade the dollar Swiss because as far as I'm concerned it's a manipulated currency. The reason we're looking at it though is that we had a negative at the very tight range the week before, and then we broke down on Thursday, so it looks pretty poor. 95.49 is the resistance point, or the breakdown point. I've been talking about EuroPound. Got the let's just do the futures first. Just a reminder that we had the major buy signal on the EuroPound at the final support. So we had the buy signal here, then we had another one towards the end of last week, and then what happened? Very, very important signal on Tuesday. And what happened is we hit 3 up 3 days running, and when that happens, that's an exhaustion. It's 80% plus correct, so it's a very, very high percentage. It doesn't happen very often. When it does, it's always actionable. It took a couple of days later before the actual set of negatives filled in, but pretty much means that you take your profits at the higher the move. Just returning to spot. Pretty poor, and obviously allowed to be short, so that was a nice one on the upside. We'll finish off with dollar CAD. So we had the positive the week before, and then we had a negative on Tuesday, but no follow through there at all really, and that negative slam dunk wasn't at resistance, so there's not really much to hang on to there. I suppose we've got the low of last week, minor level around at 133.03. Okay, we'll leave it at that.